Good morning. Happy 4th of July, everybody. My name is Billy Parker, and I'm president of MC Providers of North Texas. And joining me, as always, is our national underwriter, Paul Peebles with Old Capital Lending. Well, Paul, looks like we're still holding at record lows on the interest rates. Right now, folks, we're looking 30-year fixed-rate mortgages, 4.5% APR. Yes, 4.5% APR. And if you're still thinking about maybe trading up to a 15-year fixed-rate mortgage, Paul, those rates are running at 3.7% APR, and we're helping out a lot of people, save thousands of dollars of those who are going from a 30 to a 15-year fixed-rate mortgage. Now, it's interesting, Paul. We know, and we want our viewers to know, that obviously the credit scores play a very important part these days on qualifying for a mortgage. And I know you've got some very interesting news to share with us today about credit scores.
I do, just a little bit. Things have changed a little bit in the last couple of years, and I want to make sure everybody bring them up to speed here in the Underwriters Corner concerning derogatory credit. Derogatory credit, I'm not talking about small 30-day lates. I'm talking about like a bankruptcy, either Chapter 13 or Chapter 7 bankruptcy, or a short sale where you sell the property for less than what you owe against the property, or even a foreclosure. So there's new rules that have come up in the last couple of years that I want to make sure everybody's aware of when it comes to buying a new home. So if you have some of these major derogatories, let's kind of go through them just very briefly. So if you have filed bankruptcy, as an example, and there's a couple different bankruptcies out there, but say a Chapter 13 bankruptcy or a Chapter 7 bankruptcy, we have to see at least a couple years after the period of time that it was dismissed. So we want to see at least between 2 to 4 years from a bankruptcy, depending on the type of bankruptcy it is. Please give us a call and we'll kind of go through those specific rules. Another one is a foreclosure. So if you do have a foreclosure, Fannie Mae is really tightened up on foreclosures. So if you have a foreclosure, it could take up to 7 years for you to apply and provide you have reestablished your credit to get a Fannie Mae loan.
Now, Paul, I just want to make sure our viewers understand, because we've had a couple of questions on that. So if they've had a foreclosure, then for the next 7 years, if they're looking to apply for a loan that's going to be backed by Fannie Mae, then they're going to be ineligible. Is that pretty much what you're saying?
With Fannie Mae, they would be. Now, there are certain other, like FHA has a little bit lighter rules on that, but with Fannie Mae, those rules are right now at least 7 years.
Okay.
The other one is a short sale. And if you sell your home for for less than what you owe against it, that's a short sale. And so to buy a next house, they're going to want you to be on the sidelines for a little bit too, for at least a couple of years. But it really depends on how much money you are going to be putting down on the new house.
Okay.
So if you put down, say, 20% on the new purchase and going through Fannie Mae, that you probably will be on the sidelines for 2 years. If you put a little bit more than 10% down, it could be 4 years. If you're putting less than 10% down, it could be 7 years. Give us a call. We'll kind of go through all those rules too, because they do change, but we want to make sure you're up to speed on some of these rules too.
And what's interesting, though, Paul, is on the other side of the coin is that there are a lot of people that are looking for homes and apartments to rent. And in fact, I know you've been talking to quite a few people on the commercial side of getting acquisitions, 1 to 4 family units, residential units, and multifamily complexes for renters. So if you're an investor and you're in that market, now's a great time to be looking at your options as far as that goes.
Absolutely.
So give Paul or myself a call, and we'll be able to walk you through that. Well, Paul, our 2 pick cities this week are Grapevine and Trophy Club. And so far, let's just end it with this. For the month of June, there were 47 homes that were sold in Grapevine, and the average sales price was $224,470. Now, Paul, in June, the average days on market was 49, and then the last 7 days of June, there were 14 homes that were listed and 4 homes that were sold. Now, in Trophy Club, in the month of June, there were 19 homes that were sold, and the average sales price was $292,229. and the average days on market was just right at 77 days. Now, the last week of June, we saw 5 homes that were listed and 3 homes that were sold. So for the end of the month of June, we had 197 current active listings in Grapevine and 96 active listings in Trophy Club. Well, folks, that does it for this week. We appreciate your input. We appreciate all your comments that you're sending to us. Thank you for the words of encouragement, and we look forward to seeing you again the next time.
Thanks.